Beginning the show today, and I'm sure that sometime over the last few weeks, many of the cow-calf operators watching took some time to look through their year-end numbers for 2019. Nebraska Extension Beef Educator Dr. Berger joined me on the show to explain what the most recent figures tell us and advice for producers looking ahead.
So for cow-calf producers, I think 2019 is going to be one that we're going to remember was pretty challenging, both from a production and a price standpoint. Obviously, production circumstances last spring were very difficult with the bomb cyclone, the very wet weather we had. Pretty high calf losses occurred, and that resulted in cow-calf producers having less calves to sell when they came to market this fall. Conjoined with that is we had some disappointing prices, and that when you have less product to sell and lower prices, economically it was a pretty challenging year for cow-calf producers.
In terms of unit cost of production numbers, what do you see here? Where have they been and where do you see them going?
When we think about cost of production numbers, I think we are seeing them somewhat stabilize. We saw a really rapid increase over the last decade, especially in the early 2000s as we got into times where we had some better prices. We saw a run up in feed prices, specifically pasture prices in Nebraska. We've seen some of those moderate a little bit now. I think as we think about unit cost production, the three big things I see that really drive cost of production for cow-calf producers is number one, feed. About 40 to 70% of annual cow costs typically come in either grazed feed or harvested feed. Second would be overheads, and when I speak of overheads, I'm thinking about labor and equipment. And then the third would be cow depreciation. Those are the three big costs that typically drive the majority of cow-calf costs. So those are things that I see that are big ones. As we think about where those costs are, we've seen some of those moderate a little bit, but we continue to see some challenges, specifically I think on the labor and equipment side. Those things continue to be ones that are challenges for us from a cow-calf perspective.
What are some of your projections for 2020 producers?
You know, in terms of cost of production, I think we're probably going to see things somewhat moderate a little bit in terms of where they are. I don't think we're going to see great increases in pasture prices. You know, I think the spring is still ahead of us, so we're hoping for a different weather outlook than we had last year. Parts of the state are a little bit short on hay. There's other places where they have ample hay supplies. And so depending on where you're at, feed prices might be a little bit of an issue, especially if you're a little short on hay. As we think about what the price outlook looks like, again, I think we're hoping for better prices in 2020. We're going to have a smaller calf crop, I believe, coming to this town this fall in 2020, and so hopefully that'll be supportive of prices as we move through the rest of this year.
Aaron, are there cost areas that producers can think about reducing this year or in the years ahead?
So as we think about ways to reduce cost of production, in the January issue of the Beef Watch newsletter, we reviewed an article from Kansas State that really looked at some cow-calf enterprises that are part of their Farm Management Association. Interestingly, they broke those out into high profit, medium profit, and low profit. Those that are in their high profit group find ways to have good production with lower cost. And that's pretty intuitive, but we were looking at a difference of around $125 to $150 in feed costs between the high profit and low profit group. So paying attention to both how you're getting those cows fed, that's both grazed feed and harvested feed. You know, they also tended to have lower overhead costs, things related to labor and equipment, as well as interest and depreciation. So those are ones to pay attention to as well. And then I think also just understanding what are some things that you might do from a marketing standpoint to capture more value for the product you have. How can you identify what the market wants, differentiate your products from others, and find ways to capture additional value?
Aaron also recommends that when prices are down, consider buying or retaining some replacement heifers to have in production for when prices increase. He also says to pay attention to the markets and look for opportunities to manage risk. We've posted the link to the Beef Watch article Aaron talked about in this interview on the Market Journal website.